when I go out and invest in real estate, my goal is to generate a 7% cash on cash return on my money. That means if I go out and I invest $100,000 to go out and buy a rental property, if $100,000 is going from my bank account to this property, I want a 7% cash on cash return, meaning $7,000 of cash flow profit after paying for my expenses this year at least, and next year and the year after that. Hopefully more in the following years, but at least that's 7%. So that means I get the rental income coming in from the property, and then I use the rental income to pay for the expenses. And then after paying for the expenses, I still want the 7% of profit in my account. Now that cash flow is just the cash flow. If you're investing in a good area with growing demand, you should hopefully also see the value of your real estate go up as well, become more valuable. But for me, that's just icing on the cake. I really don't care what's going on with housing prices or real estate prices, because when I go out and I make my investment decisions, I'm making my investment decisions based off of one thing: cash flow, not future potential appreciation. That's speculating to me. That's gambling. I really don't try to predict where home prices are going. Instead, what I'm looking at is I'm calculating how much money this property is going to cost me after repairs, how much we can rent out this property for, because that is much easier to calculate. You can just look at the market data to see what the rental value is. Then you can put in a good estimate as to what your costs are going to be, especially when you've been investing in real estate for a while. You're going to get a very good grasp of understanding what your monthly costs are going to be depending on the age of the property, the quality of the property, and then you just run the numbers. This is what you think you're going to get in rent. This is what you think your expenses are going to be. Add in a little bit of margin, because sometimes you can be wrong, and that is your leftover profit. If that leftover profit is enough to justify you making that investment, for me, that's at least a 7% return. That is a good deal for me. If it's not, you keep looking. Yes, today's housing market is still crazy. Yeah, we have a lot of downward pressure on the housing market with the interest rates rising. But again, I'm not sitting here trying to time the market. What I'm looking for is just the right returns, the right cash flow for me. Dividends are when a company has a profit, a big profit at the end of the year. And now when they have this profit, they can do three things. They can either save this money for an emergency, they can take this money and reinvest it back into the company, or they can give this money away to their shareholders, to their investors, in the form of a cash payment. Now, if you are a startup or a growth company, you're not going to necessarily want to save a lot of money, because you're going to be investing as much of this money back into the company. That's why you hear a lot of startups don't have any profit, because they're reinvesting all the money that they're making. So companies then who are much older, a little bit more mature, that have those big profits, that no longer have that same need to invest back into the company, they are going to have the ability to then just give it away to their shareholders. That is a dividend. You get dividends, which is cash flow, for doing nothing except owning the right stocks. Now, this is where one of the things I want to caution you is, when it comes to the actual game of investing in stocks, stock picking, finding the right companies, there's a lot of risk involved with that, because now all of your eggs are essentially in that one basket. Because if the company that you invested in goes down, well, you would lose money. If the company you invested in goes up, you make money. If you invest in Amazon and Amazon goes bankrupt, you lose everything. If Amazon takes over the world, you make a lot of money. But this is where, if you are not interested in keeping up with companies, if you're not interested in researching companies, if you're not interested in doing that type of fundamental and financial analysis, you probably shouldn't be in the game of trying to pick stocks, because there's a lot of work required in order to do that. If you don't know how or want to do that work and you're just picking stocks, then you're gambling. And well, when you gamble, you can make a lot of money, but you can lose that money just as quickly. The alternative would be to invest in a fund. This fund could be an ETF, an exchange-traded fund, or an index funds. These are funds where now you can get exposure to a group of companies. Now, one of these types of funds that you can invest in, one category, are dividend funds. Dividend funds are now funds that invest in companies paying out these dividends. And the reason why this can be beneficial is because now you can get cash flow without having to find the best cash flow producing company, because now you can invest in these dividend producing funds. Now, I'm going to go over a few examples, and I got to give you that disclaimer here. I do not recommend what I do to anybody. I am not telling you what to invest in. Everything that I talk about in this video and all of my other videos are for educational purposes only. If you have questions, talk to a licensed advisor in your area, and always do your own due diligence before you invest, because investing has risks, and you want to never, ever blindly trust a random guy on YouTube. Here are a few examples of dividend ETFs. Number one is SCHD, which at the time we recorded this video is paying just under a 4% dividend. Another one is VYM, which at the time of this recording this video is paying a dividend of just over 3%. And then you have VNQ, which is a REIT, real estate investment trust ETF, which is paying out yields of just over 4% a year in dividends. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.